Good morning, everyone. It's a pleasure to be here to welcome you to the first in a series of events that the University of Waikato is launching in collaboration with researchers from across New Zealand and around the world to consider transformative potential of artificial intelligence for particular industries. Today, obviously, we're going to focus on finance and the financial services industry, bringing together researchers, data practitioners and business leaders to contribute. And the talks are going to cover risks and challenges, leveraging AI for prediction, data streaming and adaptive AI, as well as looking at cybersecurity, the importance of explainability, and how to approach the decision to uptake the technology. So as I think the program indicates, in a role separate from the University of Waikato, I am also the chair of the board of the Reserve Bank of New Zealand. And I've asked my colleagues at the bank to provide some background for me on the work that the bank is doing in the artificial intelligence and machine learning space. So the Reserve Bank is very much at the moment in the sort of learning and watching what the financial services sector is doing with artificial intelligence. We're aware that a great many opportunities to use artificial intelligence and machine learning are available, but also following very closely the implications of that for the development of the financial services sector and also for regulation. So one of the challenges that is apparent from the use of artificial intelligence and machine learning is that we operate in the financial services sector in a sphere of regulation where it's important that the regulators understand the models that private sector institutions are using to assess the risk of their portfolios and to make the decisions that they make. So at the moment, of course, with the technology and the models of the past, we have had some comfort in thinking that we understand the ways in which the calculation of risk in portfolios and the decisions that financial institutions make have been formed. But as we move into a world of artificial intelligence and machine learning, there is a concern expressed in the literature about the auditability and external interpretability of machine learning models that would be used in areas such as portfolio management and the assessment of risk. So one of the key issues is going to be how to make the models that are used based in artificial intelligence and machine learning sufficiently transparent that they work for the private sector institutions, but that in addition the regulators are able to understand the calculations and the basis for the allocations that emerged from the models. There are also opportunities in the regulatory and policy space, obviously, for the use of artificial intelligence and machine learning to complement the sorts of analysis and the sorts of work that central banks have done and that financial sector regulators do in the past. One, for example, is monetary policy. Another is in assessments of financial stability. So one of the things that we know about a world in which we rely on the standard empirical macroeconomic data sets that are available for analysis, is that, of course, the data that we get associated with those data sets is usually somewhat historical at best. And as a result of that, economists have relied on cyclical predictions associated with those data and with the models associated with them to make assessments of appropriate policy settings. One of the opportunities with artificial intelligence and machine learning is to expand the analysis that we undertake outside of those traditional purely empirical data sets. So, of course, all around the world, central banks have supplemented the empirical work that they do with surveys of opinion, both in the financial markets and of firms that are producing in the real sector of the economy. So artificial intelligence and machine learning models obviously have the ability to utilize information on opinion and sentiment from a wide range of sources, media and social media, for example, in a way that is certainly complementary and possibly more systematic than it's ever going to be possible for a central bank to do by calling around key contacts in firms and in the financial markets. So there's a lot of potential in that area because, of course, we know that sentiment is very important in financial markets. We know that it's hard to observe it changing in real time, and certainly hard for policy to react in real time on the basis of those observations. So the models that are emerging have a lot of potential to assist us in those sorts of areas. Of course, within the financial institutions themselves, there's similarly a lot of opportunity for artificial intelligence and machine learning based models to make more efficient and more accurate a whole variety of decisions that financial institutions have to make. So, for example, on credit scoring of potential borrowers, or the pricing of insurance risks, for example, institutions have tended to rely on a relatively limited range of empirical observations about individuals and about sectors to decide whether to make a loan or not, and to price either the loan or the insurance policy. So again, artificial intelligence and machine learning has the potential to significantly expand the range of considerations that institutions can actually build into their insurance, into their credit allocation decisions. In the literature, we do find a concern about, again, the potential transparency of those decisions. So, for example, if a consumer is denied insurance or denied a loan because an extremely complex model has suggested they should be, how do we actually then justify that decision to the consumer in a way that they would find acceptable? So again, much as the models have huge potential, the challenge will be in part to make the way in which those models are reflecting particular issues transparent to the consumers and potentially also to regulators as well. There's another area in which these artificial intelligence and machine learning models might be helpful, and that is in relation to regulatory compliance and also to the detection of fraud, including in the anti-money laundering space. Anti-money laundering is one of the big challenges for financial institutions these days. There's been a significant onus placed on financial institutions around the requirement to know their customers and to check the validity, the source of funds being transferred before they actually do so. And again, often that process of checking into transactions is highly manual and it uses a relatively small amount of information. The potential for artificial intelligence and machine learning based models to consider a much wider range of data, much faster than individual people could in checking up on those transactions is really significant, because of course checking on those transactions manually can involve a very large amount of staff time. Similarly, financial institutions across the whole of the financial sector stability space are subject to a very wide range of regulation and the compliance costs for institutions we know are significant. So both from the point of view of the institutions, considering perhaps 200 different points of compliance that are established by regulations in the banking sector, for example, and from the point of view of the regulator, models that are able to deal with much more complex and much larger data sets and assessments that run across a range of regulatory requirements rather than individual requirements that help us understand how complex relationships within different components of regulatory compliance may be related. All of those things have huge potential for the use of artificial intelligence and machine learning in the financial services sector. I think it's clear that this is an area where practice is developing very quickly. We know that financial institutions are very interested in this technology. The financial regulators are also trying to move quickly to understand these new applications and to understand the implications for their work as well as for the financial sector as a whole. So I think this conference is really timely. It's of great interest to the financial institutions here in New Zealand, but I think as the range of speakers that we have on the program today and the global spread of the audience today shows, it's a really important issue right around the world. So I'd like to compliment my colleague Professor Albert Beffet for his work in pulling together this program and for the leadership that he's providing in our artificial intelligence team at the university. We hope that we'll be able to organise more forums like this and in this model, so we'll certainly welcome any of your feedback on how things go today. So thank you all for participating. All of those who are up in the middle of your Sunday night ready to speak today, thank you for doing that. I wish you a very productive and interesting day today with this symposium. And now I'd like to hand over to Dr. Robert Durant, the chair of the first session, to take the formal program forward. Thank you very much.